China's economy continues to deteriorate. A large number of companies have closed down, the unemployment rate remains high, and young people cannot find jobs. The Chinese Communist Party authorities are helpless. Chinese economists who speak the truth are suppressed and silenced by the authorities. Recently, the punishment of Gao Shanwen, a well-known Chinese economist, has attracted public attention. Against the backdrop of continued economic decline, every field is in trouble. According to data from the China Cuisine Association, more than 1.05 million restaurants closed down in the first half of 2024, and the total number of closures for the entire year is estimated to exceed 2 million. At the same time, China's banking system has also been hit. According to data from Enterprise Early Warning, in 2024, 199 small and medium-sized banks in China were deregistered, mainly rural financial institutions, far exceeding the total from 2021 to 2023. A report by Sohu.com in August last year stated that, as of the end of 2023, nearly 700 county-level TV stations in China had stopped broadcasting or closed, and the momentum of this wave of closures is still expanding. It is understood that nearly 2,000 county-level TV stations across the country are facing closure, which means a large number of media practitioners will lose their jobs. Veteran media person Yan Chenggu recently, January 4th, posted on Facebook that the closure of TV stations also involves many film and television production companies and advertising companies that have contracted to shoot. The number of technical, promotional, and extras employed by these companies is even harder to count. The industry's ecology is in a half-dead state. Unless the consumer market suddenly picks up, the decline of the entire industry will only continue to worsen. The author said that if real estate prices continue to fall, related upstream and downstream practitioners will also lose their jobs. The sluggish financial market will also affect employment and consumption. New investment has dried up, old factories have moved away, manufacturing has overcapacity, and foreign trade has been squeezed, leaving a large number of migrant workers and urban poor with nowhere to go. Now, even the cultural education sector in the superstructure is facing a cold winter. The author believes that if the entire market continues to decline, it will remain unclear where the root cause of the economic downturn lies. The ills of today's China are all within the system. People are increasingly pessimistic about the future. The depression of all industries has caused a chain reaction. The army of unemployed is constantly expanding, and continuing down this path leads to a dead end. The author said that CCP leader Xi Jinping has been pursuing state advancement and private sector retreat, carrying forward the Feng Xiao experience, condoning local governments to investigate 10 years of taxes and deep-sea fishing, and squeezing the survival space of private enterprises. His goal has been achieved, and the entire market is indeed in mourning. Recently, Gao Shanwen, chief economist of China Investment Securities, gave a speech at the Peterson Institute for International Economics, a U.S. think tank. He was punished and banned for disclosing the real data of China's economy and angering Xi Jinping. So, what did he say? The Wall Street Journal recently quoted sources saying that Gao Shanwen's two comments at the forum on December 12, 2024, angered Xi. One of the comments questioned the reliability of China's economic growth data. Gao believed that the GDP growth rate in the past 2 to 3 years was only about 2%, while the official figure was close to 5%. The other comment questioned the ability of top leaders to take measures to boost economic growth. Earlier, Zhu Hengpeng, deputy director of the Institute of Economics of the Chinese Academy of Social Sciences, was detained and dismissed in September last year for criticizing Xi Jinping's management of the domestic economy in a private WeChat group. This led to the replacement of all senior executives at the institute. On January 10th this year, a commentary article in the Epoch Times stated that it is well known that the CCP is a habitual liar and is accustomed to using fake economic data to embellish its facade. Regarding the ability of the Beijing authorities to save the economy, the current ongoing economic winter is the best proof. The article argues that the more the CCP fakes, the more guilty it feels. And the more incompetent the party leader is, the more he wants to appear superior. Gao Shanwen publicly questioned the CCP's fraud and the Beijing authorities' ability to manage the economy on important international occasions, which caused the CCP to lose face and angered Xi Jinping. How could Xi not be angry and order Gao Shanwen to be silenced? The article directly pointed out that if Gao Shanwen and others are silenced and all doubts are blocked, would the Chinese economy recover? The result is likely just the opposite. Instead of recovering, the situation will only deteriorate further. Beijing and Shanghai can no longer hold on. China's current economic downturn is becoming increasingly serious. Consumer demand is weak, companies are cutting wages and laying off workers on a large scale. Businesses are closing down, and people are complaining, "I really can't afford to live anymore." The Chinese New Year is approaching. However, in contrast to the bustling atmosphere of preparing for the traditional New Year as in previous years, mainland China is currently gloomy and somber, with cries of closures, bankruptcies, and unemployment spreading everywhere. Foreign investors in Beijing, Shanghai, Guangzhou, and Shenzhen are fleeing. The wave of unemployment is spreading to major cities at a dizzying speed. According to official statistics, both Beijing and Shanghai experienced a sharp decline in consumption in November. Beijing's total retail sales of consumer goods fell by 14.1% year-on-year in November, and Shanghai's fell by 13.5% year-on-year, while the national total grew by 3% year-on-year during the same period. In addition to Beijing and Shanghai, Guangzhou's retail sales in November also fell by 1.6% year-on-year, and as of the time of this article's publication, Shenzhen's data has not yet been released. In the past, there was a saying that economic downward pressure would not affect Beijing and Shanghai, because Beijing and Shanghai would absorb national resources, so Beijing and Shanghai will always rise. But now, on the contrary, everything is falling apart here. As first-tier cities among first-tier cities in China, will the current consumption status of Beijing and Shanghai become a national forward-looking indicator, or are there special factors behind them? Behind the decline in consumption in Beijing and Shanghai, I believe there are at least several important reasons. Asset shrinkage, employment fluctuations, differences in consumption structure, and higher household leverage ratios. The big impact of declining personal wealth. The widely discussed consumption downgrade is not merely a simple impact of income changes. Compared to income changes, the wealth perspective brought about by asset price fluctuations has a greater impact on a person's consumption. Let's take Beijing and Shanghai as examples. The market value of a very ordinary house in Beijing and Shanghai easily exceeds 5 million, while in other second and third tier cities, it may only be 1 million. Over the past few years, we have clearly seen that both first-tier cities such as Beijing and Shanghai and other second- and third-tier cities have experienced a sharp drop in housing prices. The decline in Beijing and Shanghai is not smaller. If the decline in each city is the same, for instance, a 30% drop, the absolute value of the average total price of real estate in Beijing and Shanghai, 5 million, shrinks by 1.5 million. While the absolute value of the average total price of real estate in other cities, 1 million market value, shrinks by only 300,000. Such asset shrinkage has a huge impact on consumer psychology. It is also necessary to emphasize a cruel reality. Although many new Beijingers or new Shanghainese often claim how inspiring and hardworking they are, most of them have not made much money from work in cities like Beijing and Shanghai. Instead, they gritted their teeth, bought a house, and benefited from rising prices. In the end, they mistook the dividends of the times for their own ability. This is obviously an illusion. However, it is undeniable that many people's satisfaction and consumption potential were based on the previous housing price increase. When the domestic real estate market was booming, even while traveling abroad, many Chinese people would feel happy when they learned that local housing prices were very low. Now that house prices have dropped dramatically and they cannot sell their houses, their most valuable assets are gradually losing value. Confronted with this shock, they cannot believe it. and their spending budgets have also started to drop dramatically. The impact of employment fluctuations, greater, widespread layoffs, and unemployment. Previously, hot cities such as Beijing and Shanghai gathered a large number of high-income occupations. When the economic cycle was upward, these industries were booming and helped the cities attract countless talents from all over the country. Now, as these industries begin to decline, they naturally cut salaries and lay off workers, leading to widespread unemployment. This situation has led to an exodus of foreign populations and migrant workers from Beijing and Shanghai, along with a decline in consumption power. We can clearly observe that, over the past few years, industries with strong wealth-making capabilities, such as real estate, finance, education and training, and the internet, have successively encountered financial difficulties due to objective market laws or strict regulatory measures. In addition, unless you are a wealthy native, life in first-tier cities is not easy. For most young people, first-tier cities are either roll or leave, because the cost of living here is much higher than in other cities. Without better job opportunities, they have no reason to continue paying the high costs of staying in such places. As the population decreases, consumption naturally declines. The previous hustle and bustle gradually fades, replaced by a gloomy and deserted scene as more people leave Beijing and Shanghai each day. Differences in consumption structure. Looking at the national consumption data from November 2024, one clear feature emerges. Optional consumption has dropped sharply, with the largest decline seen in cosmetics, which fell 26.4% year-on-year in November 2023. Meanwhile, essential consumption related to basic life needs has remained relatively stable. Notably, household appliance consumption grew by 22% year-on-year, driven by government subsidies for replacing old appliances with new ones. This demonstrates that subsidized consumption has an immediate effect. In the future, we can expect more such subsidies, which is worth anticipating. In the past, first-tier cities were at the forefront of consumption upgrades in the country. Consequently, the proportion of optional consumption by residents in first-tier cities is much higher than in other regions. This also results in a greater potential for consumption decline in first-tier cities compared to other areas. Thus, it is not that people in other regions do not want to save money, but rather that consumers in these areas have hardly experienced substantial consumption upgrades. Consumption here is largely focused on meeting basic needs like food and clothing, making it genuinely difficult to save money. Residents have a higher leverage ratio. The housing price-to-income ratio in first-tier cities is much higher than in other cities. In other words, even though income in first-tier cities is higher, the increase is far less than the increase in housing prices. This is the effect of leverage. It also means that people of the same age and industry who have bought houses in first-tier cities generally face much greater financial pressure than those in other cities. Due to this financial pressure, the marriage rate and fertility rate in first-tier cities are also much lower than in other cities. In smaller cities, due to less developed modern financial concepts and relatively low total housing prices, ordinary people do not use leverage to the extreme when buying houses. In cities with high housing prices like Beijing and Shanghai, purchasing a very ordinary house may require a loan of several million yuan, putting residents under significant leverage pressure. From the data, we can observe that once the resident leverage ratio exceeds a certain critical value, the higher the resident leverage ratio, the slower the consumption growth rate. The two figures exhibit a very obvious negative correlation. Facts and data show that in an economic downturn, there is no place that is an absolutely safe fortress. The belief that Beijing and Shanghai will always rise might just be some people's self-consolation, much like the notion that rigid demand is immune to price drops. Such brainwashing judgments have no reference value, only emotional value. Additionally, the decline in consumption indicates that residents' financial pressures have begun to affect their actual quality of life. Forget about housing prices, which is really a non-nutritive topic, because when difficulties arise, bricks cannot be eaten as food. The next focus for ordinary people like us should be on securing work and income for ourselves or our families in the coming year. It is no exaggeration to say that any company that can pay wages on time and in full now is a good company. After Beijing and Shanghai, whether other hot cities and more second- and third-tier cities will experience similar consumption declines remains to be observed. However, weak consumption is not just a short-term issue, but a long-term structural problem. We have always prioritized investment and production while neglecting the importance of consumption. Some even consider consumption, eating, drinking, and having fun, as detrimental to hard work. This understanding is entirely wrong. Regarding the pressure of deflation and the value of consumption, I previously shared a post on my paid platform aimed at helping readers overcome inflation anxiety and protect their finances by presenting facts and logical reasoning. In short, consumption is the core driving force of sustainable economic growth. Without sufficient effective demand, production becomes meaningless and inefficient. Once the decline in consumption becomes a trend, it easily leads to a vicious cycle. A decline in consumption causes manufacturers to incur losses or reduce production, leading to upstream and downstream industrial chain wage cuts or layoffs. Then those whose wages are cut or who lose their jobs further reduce consumption due to reduced income. Furthermore, as 2025 approaches, with the prospect of Trump taking office, we can be almost certain that international trade protectionism will rise again, new trade frictions will emerge, and external demand will become unstable. China's economy will enter 2025 with significant challenges, and we will wait and see what happens next.